Hi, this is Mike Mott from Mott & Associates with your May 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic headlines from recent weeks and give you some insight into what they might mean for you as an investor. Oh, and by the way, please stay tuned at the end for the required disclosure statement that needs to be read. Well, let's get started. The first quarter earnings season kicked off in April as U.S. firms reported their performance in the first 3 months of the year. So far, the news is mixed. Out of 280 S&P 500 firms, overall profits were up a respectable 9.1%. However, top-line revenue, that's sales, was flat and many firms missed their revenue targets. These results indicate that the firms struggled with weak demand and that earnings came from carefully controlling cost rather than organic growth. The revenue misses were especially stark among firms that depend on global sales. The strong U.S. dollar has hurt the conversion rates, and which has made it more expensive to buy U.S. products overseas. Volatile oil prices and soft global growth also affected many firms. On the positive side, firms that were able to squeeze, a lot of firms were still able to squeeze out respectable profits. We also got our first look at Q1 economic growth. The advanced estimate of the gross domestic product showed that the economy basically ground to a halt in the first quarter, growing at just 0.2%. Though this early report is based on incomplete data, we can see that exports plunged, businesses slashed investments, and the consumers held onto their wallets with dear life. How much of this weakness is still with us in the second quarter? That's a big question that economists are going to have to answer. But so far we know that the consumer spending has edged upward in March, and wages increased in the first quarter, giving Americans more money to spend. Hopefully a warmer spring and summer will give consumers spending and business activity a boost. Last month's Federal Reserve Open Market Committee meeting was also a major event. Investors watched the meeting closely to see if the Fed would offer any more guidance about future interest rate hikes. Instead, the Fed completely removed all calendar references from the official statements, indicating that a mid-June increase is very unlikely. The takeaway from investors is that the Fed is being very sensitive to the economy and to the financial markets and isn't ready to commit to interest rate hikes yet. This is good news because it shows that the Fed is being very cautious and won't make any sudden moves which could cause market turmoil. In the weeks ahead, investors will be thinking hard about whether this first quarter weakness is going to continue into the second quarter. And while some of that can be attributed to seasonal winter factors that have faded as the warmer weather has come along, currency issues and oil price volatility will probably still be with us. As always, we'll be keeping a close eye on the economic environment, and we'll let you know when circumstances warrant any changes to client strategies. Well, that's it for the May Educational Economic Update. As always, if you have any questions or concerns about what you've heard, please give us a call and we'll be happy to talk with you about it. Well, before I end, there is an economic event that we'd like to let you know about, our annual Shred Day event. It's going to be Saturday, June the 13th. It'll be from 8 o'clock to 11. We'll have a big truck there. We'll have some refreshments, coffee and donuts. So please come. It's free to the public, so invite your friends and neighbors. We'd like to meet them as well. So once again, this is Mike Mott from Mott & Associates signing off for the month of May 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 941-746-3216 and we'd be happy to talk to you. Have a great day.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. Please consult your financial professional before making any investment decision.